Hello, I'm Duane with Home Loans with Duane, and here's your mortgage market update for the week of August 10th. Friday's weak jobs report initially helped mortgage rates, but some of that improvement is already fading. The 10-year Treasury yield dropped after the jobs report, but has now climbed back toward approximately 4.67%, giving back much of Friday's bond market rally. So why is this happening? Even though we lost 23,000 jobs in the month of July, the unemployment rate actually fell to 4.1%. That tells investors the labor market is showing signs of slowing, but it isn't weak enough to completely eliminate inflation concerns. As a result, the market has shifted its attention back to inflation. When investors become concerned that inflation could remain elevated, Treasury yields often move higher, putting upward pressure on mortgage rates. That means Friday's jobs report was helpful, but inflation is once again driving the market. For homebuyers, today's move is a reminder that mortgage rates can change quickly. If you received improved pricing after Friday's jobs report, some of those gains may already be fading. Depending on your lender, you could see slightly higher rates, higher discount points, or reduced lender credits compared to Friday. If you're closing within the next couple of weeks, I would lean towards locking when the payment and cash to close work rather than gambling on this week's inflation data. If your closing is still several weeks away, cautiously floating may still make sense, but understand that this week's reports have the potential to move rates in either direction. Here's this week's economic calendar. On Tuesday, it's the JOLTS Job Openings report. This measures labor demand and gives investors another look at the strength of the job market. Then on Wednesday, we have the Consumer Price Index, or CPI. This is the biggest event of the week. If inflation comes in lower than expected, mortgage rates could improve. If inflation comes in hotter than expected, mortgage rates could move higher. Thursday, we have the Producer Price Index, or PPI, along with the weekly jobless claims. These reports provide additional insight into the inflation at the wholesale level and the strength of the labor market. Then lastly, on Friday, we have the consumer sentiment and inflation expectations. Investors pay close attention to inflation expectations because they can influence future Federal Reserve policies. Thank you for watching this week's mortgage market update. If you're buying a home or refinancing or just have questions about today's market, I'd be happy to help. I'm Duane with Home Loans with Duane, and I'll see you on the next mortgage market update.